Hi traders and welcome to the Technical Analysis Market Watch on Friday the 4th of November. So for a non-farm payroll week, we certainly saw some action. We started the week off very strongly, but it's been a bit of a sell-off towards the end. So we'll jump straight in to see if we can find any trades for today or early into next week. So I'll start out here with the Aussie USD. And as you can see, look, once it hit that role reversal zone at the 65 cent mark, it's done nothing but sell. The last 5 days have been pretty ordinary on the selling front. And you can see, look, we've got basically 5 or 6 days in a row of just selling pressure. And even this candle here, the previous candle, tried to test the highs again, but failed quite miserably. And now it's trying to close underneath the 20 moving average, which is obviously a pretty bad sign for it. The target was easy, there's no question about that. Where it goes to from here now is going to be pretty important, because realistically, if it doesn't turn around at this level here, it's going to be in a little bit of trouble and probably test the lows again. I'll pop a horizontal line here and you'll see what I'm talking about. You can see that we've got that resistance that was right through here is going to be its only support now. If it does actually fail past this level here, it's more than likely going to test the lows again. That's not a long way away, of course, but it's still a reasonable amount where you can probably get a basic scalp in. So what you want to be doing now is going to the smaller time frames and seeing if you're identifying any movement on the smaller, say 1 hour. I'll go down to a 1 hour chart now, and as you can see here, you can see we've got basically we've been low, high, and lower, lowering it all the way. If it continues on and makes a new lower low, then you can start looking at pushing it down all the way to the 62 cent mark. But of course, if it fails and doesn't actually go any lower and actually gets above that 63 level again and above the 20 moving average on the daily, more importantly, then we can start targeting the highs again. So it's all about the 1 hour really for me on the Aussie. If it starts to trend on a 1 hour up, we're going to look for the 65 again. But of course, if it breaks this low, we're going to start aiming down for that 61.80 to 62 cent mark. So pretty straightforward trading, but I don't expect that we're going to see a lot of action until the non-farm payrolls numbers come up. Now that could really shake the market, so we're going to be very mindful of that. We've got to be very conscious that once that number comes out, it could really shift and play with the dollar strength. So it's going to be an interesting one to watch. All right, I'll move on to the US dollar CAD now. And yeah, look, this one's been another pillar of strength. It basically did the opposite of what the Aussie did. It hit that support zone that we talked about last week, and obviously bounced off it. You can see that we've got good wick action off these support zones. It's pushing up, trying to get above the 20 moving average now, and test these highs again above the 137. You can see that we've got very close to 138, not all but there really, before it sold off a little bit. That's I think the US market recovered a little bit. We'll get to that one shortly, but realistically, it's all about the non-farm payrolls. I mean, we're going to see an interesting move in dollar strength one way or the other. I'm pretty sure about that. So if we can maintain Monday morning's movement above the 20 moving average, it's going to bode well for a trade up into the 139.50 again. That's pretty much how you're going to play this one, really. If it's above the 20 moving average on Monday, we're going to look for taking longs early next week. And if it's trading underneath the 20 moving average, we're going to probably start targeting the 135.20 area, which is this support zone right through here. So this is pretty much how we're playing it. Fairly straightforward trading, I think, but it's done all of the right things for us. I mean, it gave us the entry points that we needed. If we go to the smaller time frames, like even on a 1 hour, you'll be able to see that it had pretty good action all the way up. You can see the higher high, low sequences, they play out all the time in the exact same way. So hopefully once you knew you were out of that strength area and off that support, hopefully you're able to take advantage of that. So pretty good trading really on the US dollar CAD. But again, a little bit of waiting now to see. This is effectively a very important non-farm payroll. It seems to come around very quickly, but again, it's another very important one. All right, on to the US dollar yen. And look, this one here is effectively doing the same thing in the sense that it tested the role reversal zone here at the 145 and has held up relatively strongly. It's pushed up about 250, 300 pips from when we talked last week, and that was a pretty easy trade really. Once this candle kicked in and actually closed higher, this was your trade to go up. So you basically had 150 pips of pretty easy trading. It's holding up above the 20 moving average now, the all important 20 moving average. Again, this is a scalping trade, there's no question about that. I wouldn't be looking at doing anything but scalping on the US dollar yen. The highs are fairly straightforward. I wouldn't go all the way to the very extreme high. I'd be looking at the 150 to 150 level, around this level here. And that would be a target for the upside until it actually breaks it. So until it actually breaks that zone and pushes past it, I wouldn't be looking at going any further than that. And a daily close below the 20 moving average, say below the 147.50, and then we start targeting the 145 again. So I find it's in a zone where it's very, very tradable, but I think that we need to be very conscious that it is very reliant on what the dollar strength is going to do. Not so as much as the CAD and the euro, of course, but it is still finding itself in a reasonably important zone. And I think that the target for the up and the target for the down, I haven't really got a preference. The only thing I would say is we are still moving in an upward direction, so we've got momentum on the upside more in our favour than the downside. But in saying that, a close below the trending moving average would see me looking at the 145 level again for the shorts, and of course a close above would be the 150.50 area. So yeah, reasonable trading on the US dollar yen as well. Hopefully you're able to take advantage of that move up because it was a pretty good one. All right, over to the dollar. So the US dollar is, look, it tried to, basically since last week, after that candle closed last week, it's basically pushed up and up, broken above the 20 moving average again, and it's starting to touch these levels where we know 113 is pretty strong resistance for it. Before the breakout of 114, 113 is very strong. This is the level that it failed to break through that showed the weakness. So this is the level we needed to break to actually show that it's back on track to actually continue the strength and potentially push a new high. This is the level that we're going to be very, very conscious of. So I'm going to be watching this level with a lot of interest over the next 12 hours. Once the US, in my mind, if the dollar index is above the 113.50, even 113, probably even if it's above these bodies and around the wicks, if that's there on Monday morning or Saturday morning when New York closes, that's going to be a very, very bullish sign for the dollar index, and it's going to look like doom for the euro, of course. So that's what we're looking for. A lot of strength here. Came off the bounce, which is where we really wanted it to go. It was the last line of defense last week. Good to see that it did do that. And now we're going to be looking at pushing to the new highs. So hopefully you're able to take advantage of that trade. But of course, the real trade was the euro short. And yeah, again, this is a level. It basically did the same thing. So this is what you're always looking out for. You know that we've had a role reversal zone. It hit the target. Once this candle kicked in and we had the indecision candle there, this was all selling. No question about that. Trading underneath the 20 moving average now. Very, very close to support though. 97 is a very strong support for it. If you're scalping it, look, I don't expect that we're going to see really big moves today. I think we're probably going to find that we're going to be relatively subdued until we get the non-farm payroll numbers. So the next 12 hours or so are going to be pretty flat trading. So if you're going to scalp, you need to go to the really small time frames and probably play the zones. Maybe a little bit of a pullback to the 20 moving average, but you're only talking about a handful of pips. It literally is scalping. But very same scenario on this one. Really, Monday's an easy sort of trading day in my mind. If we're under the 20 moving average, we're going to be looking at going short down to the 97. And if we're above the 20 moving average, we look at start targeting back up to parity, back up to the dollar. I think if we get any of those moves, that's the way we play this one. It's fairly straightforward. But again, it's going to be relatively lackluster today. So just be mindful that if you are placing trades, you're going to see a pretty lackluster sort of movement in this area. All right, and onto the all-important S&P 500. So, as you can see, look, we've got a lot of weakness this week. It hit the roll reversal zone, the 3,900 target. So, hopefully you're able to take advantage of that, because I think that was a pretty straightforward trade, and it did hit it perfectly. It has done nothing but sell ever since. Obviously, earnings are playing havoc. News is playing havoc. It's been a very, very big news week, and the biggest news of them all, of course, is non-farm payroll tonight. So it's going to be a very, very interesting session. But look, this is it needs to hold above the 20 moving average. That's what it's trying to do. You can see here that it's just failing to actually close below it. So realistically, move up from this level here and back above that trend line. I'm not holding a lot of weight on that trend line. I've drawn it there more so just to show that the uptrend was definitely there. But realistically, I'm not giving it a lot of credence, I suppose, when it comes to actually using it as a guide. It's more the 20 moving average here. So the 20 moving average is what we need if we're trading above the 20 moving average and above this level here, because this level is a very strong level, the 37.50 level, the blue line, very, very strong level. We need it to be closing above there to be strong next week. So if we're trading underneath that 37.50 next week, after all the news is said and done, we're going to be very, very conscious that we're probably going to be looking at going down to 36.50 again. That's probably the first target. Very strong support here at this level. You can see we're going to have support right through there and right through these levels here. That's the likely target. So if we do close below the 20 moving average, I think we'll gravitate down there next week. So we'll be targeting shorts, lower high, lower low sequences on the smaller time frames. But of course, If it breaks up above the 37.50 and closes above the moving average and above the 37.50, we're going to start looking at targeting the 3900 again, and we should hopefully see a series of higher highs and higher lows on the smaller time frames on a 1 hour, probably at the lowest, and then we can start targeting the 39. So I think it's good trading on the S&P. I think we just have to wait for the decision. It's going to be very lackluster today, I'd imagine. I can't see any big movements, so just be really conscious about that if you are trading throughout the day. But the action will start in New York, and then we'll know next week very clearly, I think, which direction we're heading, either for the 36.50 in the first instance or the 3900. So I hope everyone's had a great week's trading. I think we've had some really, really good technicals again. I think it's been a great trading week. Hopefully you're able to take advantage of some of those levels. Have a great weekend, and I look forward to seeing you all next week.